There was an Ameriprise survey of 3,000 investors with over $1 million of assets, and only 8% of those with over $1 million of assets actually felt wealthy. So it is a very common thing to feel that like, hey, I have this money. Maybe I feel comfortable or secure, but I still don't feel quote unquote like wealthy.
All right, welcome back to the Millennial Money Canada podcast. We're your hosts, Guillaume and Sam, financial planners and wealth advisors at Millennial Wealth. Again, if you're new to the podcast, welcome. This podcast is for people who want clarity and confidence with their money. And if you care about aligning your money with the life that you actually want, you're at the right place. And the topic of today, Sam, is around the most common emotional challenges that we notice clients are facing with their money. And after researching a number of our calls, we wanted to go over at least 4 of them that we've identified, provide you with the cost of having those challenges around money and the potential solutions that you can explore to shift and overcome those challenges.
You're telling me people
Ready?
get emotional about their money?
Apparently, yeah. And I can share as well. We can probably share our own journey because I recognize myself a number of times in those things, and now I'm actually on the other side where I advise people and try to help them overcome these. But ultimately, I went through those in my own journey, in my own career as well, right?
Yeah, and like I love that we're doing this because this isn't just like topics that we've picked out of the sky. We actually like you said, we researched, like you researched client calls to find out, hey, what are the top like emotional barriers and emotional themes that come up around money? So I'm really excited to dive into this today.
Yeah, and that's a side note to say as well to the listeners. So you may notice that we may somewhat pivot the podcast in a sense that if you are a business owner or incorporated professionals, or Sam focused a lot on tech professionals and equity compensated employees. But if you're in that segment and you're tuned into the podcast, our goal is to share with you perspectives that you may not have considered, and also how we are helping our clients day in, day out. And we want to use this platform to share more of that. Again, if you're in industry professionals, maybe other advisors, that's great that you're listening to this. But really, my goal and our goal with this podcast is to bring value to people who may be DIY for now because they might not have found an advisor or a planner that they really trust or they agree with their philosophy. But yeah, ultimately that's to help you to help you overcome what you're dealing with through the work that we're doing with our clients. And hopefully that's going to bring a lot of value to you as a listener. All right, let's dive into it. So common emotional challenge number 1. So the scarcity and abundance paradox. So what we noticed is even despite the high incomes of certain households, there's a lot of clients that do not feel wealthy. In fact, I will say that from my own experience over the past 2 years of working with clients, it's most of people don't think that they're crushing it.
Mm-hmm.
They are very, they don't realize how well they're doing. And then we can get into that. And then that's, of course, creating a lot of anxiety of, is it enough? And it's showing up in a number of ways, right? Either it's earning. Am I earning enough? Am I saving enough? Do I have enough to pay my bills? And in reality, there's usually a lot more available than the necessary income that they need to just survive. But there's really a blockage there that is missing in terms of how they see themselves. Sam, what do you want to add to that?
Yeah, I think that especially people who are moving stages of wealth, right? So like when you're looking at someone who's, let's say, worked their way into $1 million liquid like investments net worth, right? So maybe they're like 1.6 with real estate or something like that. But, they got out of university, got a good job, or started their business, and all of a sudden now they're seeing like, hey, like I'm mostly out of debt and I've got like a $1.6 million net worth, but I still don't feel wealthy. So there's actually a lot of research done on this, and this is like not an uncommon thing. There was an Ameriprise survey of 3,000 investors with over $1 million of assets, and only 8% of those with over $1 million of assets actually felt wealthy. So it is a very common thing to feel that like, hey, I have this money. Maybe I feel comfortable or secure, but I still don't feel quote unquote like wealthy because I think something our brains do, and maybe I'm wrong on this because obviously I'm not a psychologist, but like I think something our brains do, especially for competitive people who are kind of climbing that wealth ladder. I think once we hit a milestone, we move on to the next one fairly quickly without really taking stock of where we're at, right? And that can, lead to amazing outcomes, but it can also lead to us not necessarily taking stock of where we're at in the moment and celebrating that in the moment and realizing like, hey, I don't have to worry about like if my paycheck next month, is lower than I thought, if I'm a business owner, if like my revenue is a little bit lower. Like I actually, from a personal standpoint, can absorb that quite comfortably now and still be able to take time off and take my kids to Disneyland and not have to worry about that stuff. And so like I think that mindset gets missed along the wealth creation journey, and where people, not saying you should just stop all you're doing and live off of your investments once you hit $1 million of net worth, but like objectively you're wealthy at that stage if you're like, let's say, under 60. So like there is something to be said about the mindset there that people don't feel wealthy. I think only 8% of people feel wealthy with $1 million or more.
Yeah, and what you're referring to as well is the goalpost keeps moving all the time, for especially for ambitious people or career-driven people, which we tend to attract. And that there's a huge cost to that when that goalpost keeps moving, because it's really hard, unless you do it consciously, to stop and be grateful and be appreciative of like what you've done, what you've built, where you're at. And that really takes a conscious, for you to consciously pause and really be in that state of mind, because it's really easy. I feel for my own, I'm speaking from my own experience. It was really easy to get caught up into chasing the next goal, or the next, always be on the next thing. Right. And I mean, going through life like this
Mhm.
can be a totally missed opportunity of just having, being more present in the moment, which is something I've been working on. I would say that in my 30s, more so. I felt my 20s, they went by really fast, and I was always living ahead of time. But now I'm trying to be, really, really more present in the moment. So, and then the solution for this, what would you think? Someone who's dealing with this, I mean, how do we help clients that are usually facing, aside from, are usually facing those kind of challenging on their.
Yeah. Well, from my perspective, I think, it depends on who you're talking to. So if you're talking to the analytical guy who's like really finds comfort in the numbers, right? You can stress test a bunch of different scenarios with them and say, well, what if you lose your job tomorrow? What if your business revenue goes to zero? What if these things happen? Is your family still protected? Right. And I think once we get to this level of objectively being wealthy versus even though you're not feeling wealthy, you could cut off most of the sources of your income tomorrow, and maybe not for the rest of your life, but for a long period of time be able to sustain your standard of living with your current lifestyle, right? So I think from the analytical person, that provides a lot of peace of mind. So running your situation through stress tests, and then that's to me how I've found success working with people who are more analytical. But I think then there's the emotional side of it too, because we all have kind of our like analytical and emotional brains when we think about these things. The emotional side's a little bit harder to pinpoint. And I know there's been a lot of psychological kind of like books written on this stuff. I think the one behind me here, The Psychology of Money, is a really good book. There's also another really good book by Jim Grubman. And the name's escaping me, but we'll include it in the show notes here. And he talks about how moving different stages of wealth becomes like an immigration process. You have to, speak a different language. You're in a potentially like a new friend group, or the friend group you've had in the past is like, not able to do the things that you want to do with them, those types of things. So then all of a sudden it becomes like, well, I want to travel, I want to go on this trip, but I know my friends can't afford to come with me. So how do we like navigate those things? And there's an emotional side to it as well, and that becomes a challenge to deal with. Like, what are some of the things you found that are helpful to deal with people when they're kind of thinking like, hey, I know from an analytical standpoint I'll be okay, if something happened tomorrow, but like my mind, I just can't grasp it. Like I don't feel like I'm wealthy, I don't feel like I'm secure.
I'm going to park my answer. We're gonna get to it in in a few minutes. As part of this scarcity of abundance, I just want to let's go to the next step, because I will answer this in the last point, which is the disbelief of success, which I feel that's one of the best way I've been able to show clients and give them kind of reassurance around their scarcity or anxiety mindset around money. So yeah, we talked around the anxiety of having enough. There's another feeling around that scarcity mindset is like feeling behind. And I think this is very, present in our society. And I have my own perspective on this, but, it's very easy to compare ourselves to others. And then you'll compare maybe, the houses that they're buying or the cars that they're driving, and this like lifestyle inflation. And that, regardless of sometimes your own level of income, that might make you feel a certain way. And it's easy to get caught up into that comparison game, which I think for me, for example, it took me, I never really got caught up into that. Maybe when I was more into my teens, late teens, believe it or not. And then as I kind of got into my 20s, I went towards more my passions, and I've been very like passion driven, more so than like material driven, just in general in life. But the more now that I'm in my 30s and the older I get, I can see it. And even on calls, there's a lot of clients, especially that I get in front, sometimes they'll worry about, even if they're making great income, like, oh, how are we going to afford a home in Victoria? How are we going to have 1, 2, 3 kids? How are we going to, right, go through all those stages of life, and plan for these.
Yeah.
Yeah, so this feeling behind, and then also the worst thing I would say that that you can do in those situations, if you do feel behind, is actually make decisions again based on what others are doing, which ultimately is going to bring you a huge cost, right? Whether it's regretting it, as we know, the new car, that high might last a few months, a year at most, and then after that, it's already gone. So the worst thing you can do is making decisions based on others want, and that's one of the things I try to do in our calls and my work with clients, is to get them really present to what they actually want in life, and literally just ignore everything else. Just focus on yourself, focus on what you want, work really hard towards it, and never make a decision based on your neighbor or your friend. But again, that might be hard sometimes. You just said about someone who may be in a wealthier position who wants to go on vacation. But if you're the other person who maybe the income hasn't caught up, maybe you can go on vacation. So now you might be in a situation where you're stressing yourself financially to try to keep up. And that can be, that's very challenging. But that's a reality. So having the, I guess not maturity, but the clarity, and having the ability to say, okay, yes, we'll go to this, or having the ability to compromise on things,
Mhm.
just to make sure that you're not putting yourself in a position or stretching yourself unnecessarily. I think that's really key, and I think that can go a long way onto like your peace of mind and your stress level, and again, your anxiety around money.
There was like, to the note on like being the other person, there was a study done on lottery winners, and they found that the neighbors and family and friends of lottery winners had higher rates of bankruptcy.
Oh
Think about that
yeah.
for a second. So not like the lottery winners themselves, because there's been like a lot of data out there saying something like 30% or 40 or 50% of lottery winners go broke after winning the lottery. That's like been a very highly disputed study apparently. But what isn't highly disputed is the study of their close associates going bankrupt. So isn't that fascinating, hey? Because it's not like these people have been given money. It's like all of a sudden they see their friend and they're like, going to a private island or like flying private or whatever. And all of a sudden they're like, well, I got to do that. I got to keep up with this. So trying to keep up with your friends or something like that when they see financial success, yeah, for sure, that is a surefire way to make bad financial decisions. I think just the idea of comparison in general, one of the questions we ask in our intake forms with our goals and values question is, how often do you compare yourself to your peers or coworkers? And that gives us a sense of like what drives some of their spending habits and values around money and things like that. There was a guy, his name was Jake Kassan. He sold Movement watches for $100 million. I think he was 27 years old at the time. And he shared with the world on Reddit first, and then on the Founders podcast, I think it was the Founders podcast, about how he like fell into like a deep depression, had no meaning in life and all this stuff, like wildly successful, ultra high net worth, all the money in the world, right? And this is maybe a little bit different from the scarcity and abundance principle. But one of the things he encouraged people to do is when they come into a position of wealth is to find out more about themselves, right? Because if we've been kind of chasing the proverbial like carrot, right, at the end of the stick, like for a long time, we've been doing things that other people have said are the right things to do. But then if we take stock of like, well, what do I actually want to do? Kind of like what you said, Guillaume, where it's like, what am I actually passionate about? And we never discover that about ourselves. That's a really hard place to be, because we're never going to feel satisfied about the place we're in. And we're always going to keep chasing the next thing. And while I think motivation intrinsically plays a role in this, when you're objectively at a wealthy position and you still feel scared, like scarce with money, or you still feel like that scarcity mindset or the money could just be gone at any moment in time, I think one of the things, if you can overcome that, to understand that like, hey, if I make good decisions with my money, it's going to be fine going forward. But then like, what am I actually passionate about? And find some meaning and fulfillment in the wealth that you've created. It could be things like intergenerational wealth planning. That's like a fancy industry term, right? That we use, but like planning for the next generation, the kids, the grandkids, things like that. It could be giving to charity. It could be, a number of different things. But you can then find things in your life that you are passionate about and start, actually spending time and money on those things, and continue to make like sound, reasonable decisions with your money. Like, don't let your emotions take over at that point in time, because you can self-destruct still, even if you're wealthy. But if you continue to make sound, reasonable decisions, then just focus on like, hey, what am I actually passionate about? What gets me out of bed in the morning? Like if I had to do this, I had to do something for free, what would it be? What would I be doing? I think those are great questions you can ask yourself to then find out like what I should be doing, and hopefully overcome some of that mindset of like, I'm still chasing that next thing. I'm still chasing that next hurdle, which I mean, I've been guilty of too, as you said, you've been too. Like I remember when I first, and this is not wealth related, but like when I passed my CFP designation, immediately my mind went into like, okay, what's next, right? Like, okay, I'm going to tackle the CFA, and oh boy, that was a mistake. And you kind of shared recently about your CFA journey, right? But I should have taken a step back and taken stock, because I wasted money and time, probably like 6 months of my time, on something that I realized I wasn't actually passionate about and I didn't want to pursue. But it was just, oh, what's next? Right. Yeah.
Do you want to know what one of the best experiences I've ever had in life that happened to me? And it was kind of forced on me, but one of the best period that I've had, and I'm saying that because, not many people I feel like have the experience, the ability to do that. It's first of all is getting laid off, right? For that, and by the family office. And I kid you not, I was 32 years old, sitting at home, and I've always identified myself as like a career-driven professional, right? I was at Questrade, Refinitiv, the CFA, CMT, like all that stuff. And overnight, you're sitting in your living room and you have no job.
Yeah.
That was the craziest feeling. And I spent 10 months before starting something else. But for 10 months, all I had to do was literally figure out, okay, who is Guillaume? What am I passionate about? I literally had the experience of someone who works 35 years in a career and retires overnight, and then now they have to like plan their retirement.
Mm-hmm.
I felt that I had this experience for like a 10-month period in my 30s, and I wish this to everyone, because a lot of people, especially our parents, they spend their entire career without breaks. Like my dad started, I think, early 20s. He's going to be 60, 62, and he's never stopped.
Yeah.
So that was a crazy experience. And you just sit with yourself, and then you're looking at like, okay, who I am, what am I passionate about, what do I want to do with my days? And it was an amazing time. And I had to do a lot of self-reflection. And honestly, looking back, it was one of the best experiences that I've had, because I really had to stop,
Yeah. So okay, so talking about
we're on a tangent here, but we'll bring it back.
Yeah, but I want to kind of relate that, because, okay, so talking to people about the scarcity and abundance mindset, if we want to take it back to that for a second, like the primary people we work with are professionals in their 30s, maybe early 40s, right? These guys are pretty far away from the traditional retirement, right? Of 60, 65, those types of things. But a lot of them are on a trajectory to be able to retire by their late 40s, early 50s, right?
Mid-50s, I would say. In my case, like
mid-50s,
like,
yeah. But still earlier than, the average, like than what retirement average has been. So yet we're still seeing that these people are finding issues in their abundance mindset. Have you come across or had any, like, I guess the what we're saying here is like, what are the questions people should ask themselves to move off of that scarcity mindset once they've kind of realized, hey, I'm on a trajectory to be wealthier than I could imagine ever depleting over the course of my life. I'll have more wealth than I could ever spend by the time I'm 50 or 55. So, like, how do I then, like, what questions do I ask myself if I'm your client? What questions do I need to ask myself to reorient that mindset into thinking, like, now I want to pivot to spend time on things that actually matter to me? But that's really hard for me to do because I still think I need to chase that carrot. I need to chase that next dollar. I need to make sure that everything's, still going to work as it should. And one of the things, just I'll end on this, one of the things that I've read and from other advisors, I think one guy specifically, his name's Adam Chapman. He talks about people not being willing to spend money because of this mindset and this scarcity principle, even in retirement, right? So it's not just like this only exists in your career and in your earning years. This is, if you don't solve this in your earning years, it's going to get amplified in retirement because the only sources of income you have are drawing from your investment capital or pensions or CPP, right? So I guess what questions can I ask myself when I'm in my mid 30s or mid 40s to say, like, how do I reorient to an abundance mindset so that I'm not constantly stressed out about this stuff?
Yeah, that's a great question. And I think the question, if you're a listener, the question that I would ask myself if I was you is, what are the actions that I'm taking right now? Right. What I mean by this is like being really clear on your spending, your saving, and all the, your income, your spending, and your savings. Really, the three kind of big levers in life. And then what you're doing with your savings. But what is this leading to? And this is a segue into the kind of next point around anxiety and scarcity around money. But it's the disbelief in success.
Hmm.
I would say the number one thing that I've shown to every single client, they've never seen projections of where their efforts are leading. Never. The first time, because usually I was the first financial planner that they've worked with, or maybe they've worked with a financial advisor that didn't do planning. But once you show them, like whether it's an estate values like projections, whether it's just a wealth accumulation projections, they've never realized that what they're doing right now, this is what it's leading to in 10, 15, 20 years. Like they know they're doing enough in some ways, but mentally they're still not convinced. And then once you, especially if they're data oriented, they will for the first time realize, wow, this is what it's leading to.
Mm-hmm.
And like I've seen that, and especially from business owners as well. Like once you factor in some conservative assumptions about selling a business, like I remember the spouse looking at each other like, holy shit, did you see those? Like they're realizing like where they're heading into. And that is, of course, that comes from planning, whether you want to do it on your own or you want to work with professionals, but really trying to see what path are you on. And I mean, that's true in anything in life, like whether it's your health, it's your, any areas of life, but specifically with finances, what efforts are you doing? What actions are you taking? And what is this leading to if you continue doing those? And then you can adjust, right? And this is what I try to give as much clarity as possible. Usually I lower, whether it's a saving rate, I try to be, okay, this is the floor. This is the
Mm-hmm.
conservative assumption. If you just do this, this is what you're getting. This is with a high probability of success. This is where you're going to end up. And they'll be, wow. And I said, hey, everything you're doing above that, it's gravy. And then the amount of like peace of mind and clarity that it's giving
Yeah.
them, it's like, holy shit. Because they didn't know. They're saving X amount every month. And they're like, they don't know what it's leading to. They don't know if it's enough. They don't know if like they're going to be okay. And anyway, that's my biggest, I feel, influence and reassurance that I can bring to clients around
Yeah.
that this mindset. Yeah.
So if I can just, and then we can move on to the next one, but if I can just kind of
Yeah.
take something out of that
Yeah.
is you have a destination that is now visible. There's a light at the end of this tunnel that you can reach out and grasp. And having that realization, whereas before, look, if you're still in that scarcity mindset, you're not going to spend money on things that bring you joy, right? Because you're just going to be so worried about like, oh, I just need to park this, I need to put it in emergency savings, or I need to invest more or whatever. But all of a sudden, if you see that end goal, that destination of financial independence, let's say, and that's within your grasp, and you're like, man, if I just keep doing the baseline, if I just keep contributing, 10% of my income on an annual basis, then I'll reach this. And I have capacity to do 20 to 25. well, maybe I will only do 10, and maybe we will go on an extra vacation. Maybe private school for my kids is in the picture and it's not going to like hurt me financially. Maybe these things that in the past, and it's not, I don't think it's an instant overnight change. I think it's a little bit of a gradual working up to it where it's like, I've never felt comfortable flying first class. I've never felt comfortable, going on more than one vacation a year. I've never felt comfortable saving less than X amount of my money. But now I'm at a place where I can see the end goal, and now I can say, well, maybe let's start with that extra vacation. And then the next year, well, maybe we can afford to do these things. And I don't think that you overcome that mindset in isolation though, right? Unless you're like really data driven. I think you overcome that mindset with accountability partners who will keep you on track on the baseline and then also help you see where you're going. And I think that's a big distinction here and why kind of people feel this maybe a bit of a loneliness in their own wealth journey. Even if they're a family person or anything like that, is like they just don't know the answer. They don't know the end goal. But then all of a sudden when that materializes and they can see it, maybe it's 10 years away, maybe it's 15 years away, and nothing in life is certain. But when it becomes a higher probability than not that you're going to get there, I think that provides a lot of peace of mind to then gradually start to make those decisions of like, hey, my abundance mindset, like I know that even if I lose my job tomorrow, I can find something different. I know that what I've built will sustain me. I know that I don't require a lot more money to hit my end goals. Great. I can relax a little bit inside. I can have peace about that inside, and I can start to do some of the things that I've been putting off and enjoy life a little bit more.
Yes, and you know what it does too? So it depends on the client, but this is what I noticed it does. It depends on the how much they enjoy their career and the life choices that they've made. And let me hear out. A lot of people that I work with, and I would probably say that you as well, for the most part, they really love what they're doing. They're passionate about their work. And the reason why they want to work with us is usually because they do not want to they want to work with professionals and they don't want to have to worry about anything around their finances. They want to make sure everything is mostly optimized. But the point is like they love their career. They said, oh, I would like to see if I could retire at 50 or 55, but really that's not the point. Like I love what I'm doing and I see myself continuing for like a long time in a way. That's one type of clients. And then when you show them kind of the projections, they're like, okay, they're reassured. But then the other client, for example, and I've had that a few times, is you show them that that's possible. And then it does two things. It does one, it gives them a lot of reassurance and clarity, which is great. And then the other thing too is it's forcing them to be in the moment. And then they're like, shit, now I have to do this for another 20 years. And now they're realizing that like, yeah, but that's why making, really important life decisions that, go after what you want because you will be fine. Like you will meet your goals. Time's going to go by in between now and then. It's important to fill it up with something that really, you want to wake up, you want to get out of bed in the morning, something that motivates you. Now, you don't have to be like always dancing and happy, smiling. I'm not saying that, but it's really important to find a career and something that you look
Yeah.
forward to because time's going to by. And that's why, and this is again my perspective, I really don't agree with the FIRE movement like at all. And
Hmm.
I agree with the principles of the FIRE movement from a point of living within your means and that kind of stuff. But where I don't agree is I don't necessarily agree sacrificing necessarily like your 30s, 40s and not doing anything, like taking it to the extreme, for example, and then that's a point to the next step, which is going to be around spending, but really like living so frugally that you're missing out on so many life opportunities, especially as your kids growing up, just so that you can live a bit more comfortably later in life. Like my perspective, ideally, would be having a more smooth, like I would spending pattern and a more enjoyable life all the way throughout, from today all the way to the time I die. Like I don't want to have any big steps into how I'm enjoying life and what's bringing fulfillment in life and the activities I'm doing and the things I'm doing and the trips I'm doing. Like, I don't know if that makes sense, but that's my perspective. Everyone is different,
Hmm.
but yeah, I guess that's a
Yeah.
good point to the spending. Yeah. Do you want to add something?
Well, no, like I think we can segue into the spending thing now because I feel like that's a kind of a next step in something that we really we talk a lot about. Surprising, not surprisingly, like, but that next point, which I'll let you kind of segue into.
Yeah. So the first part was around the anxiety and scarcity of in abundance. And then the second point is around guilt and paralysis around spending. And this I find, again, through the planning exercises, it's also the benefits of working with planners, and they can show you what you can spend on, and again, making sure that you're aligned with all your goals. But to me, that's one of the biggest missed opportunities for clients who don't have a plan or don't work with a financial planner who provides that. Because I've seen people, even in my friends, missing out on key life events like trips. When we went to Australia, and I know a lot of people could afford it, but somehow they didn't think they could. But literally missing out on really fun life events because they have this fear of spending, because maybe they think they can't afford it, or because it's going to set them back financially towards their goals. And all this can be really solved with quantifying, okay, what is guilt-free spending? What can you have excesses on? What do you need to maybe restrict yourself on? And how is that impacting your progress towards your long-term goals? But
Hmm.
that to me, it's the true cost of not planning, is really living a subpar life that is, again, is not necessarily aligned with how you would want to live your life otherwise, if you had that confidence and clarity around your money.
Yeah, I agree with everything you said. I think one of the things that goes back to maybe our first point is the inability, yeah, to actually enjoy your money and spend it in the moment. Creates a lot of anxiety around spending, and I think typically as well, and this is what I see, is it creates tension in relationships. Because typically, what we see with couples is one person is very frugal and one person is very, not gonna say spend happy, but like they have no problem spending on things they need today. And so, how to balance that, especially as you're starting to get like real money, real incomes coming in, your income is expanding over time, and maybe your expenses aren't, like how to rationalize spending on things that previously in your life you haven't been able to afford, and carrying that mindset into now a position where you're running a large surplus on an annual basis. You've got money to spend, but that mindset's still like, I've got to save. And so there's a balance you need to draw with your spouse in this as well, in spending money. And the one thing I see is as well is there's there's guilt around spending, but that doesn't stop people from spending. So all it does is it increases the guilt around it. And I think the guilt is that I'm stealing from my future self, or I'm doing something I shouldn't be doing because of all of these habits that we've been forced to do when we weren't making a lot of money, like budget and not spend more than we need to on food and entertainment or travel and all of these things. And then when you do, inevitably, it creates that guilt and anxiety around it. And so I think there needs to be an open level of communication specifically around spouses. And I did a recent video on this, which is coming out in the next couple days here, around around your finances, like your spending and your cash flow and finances in general and marriages. What the study found was that 60% of couples argue about money, and that financial non-disclosure in relationships and financial issues are the second leading cause of divorce behind infidelity. And so this is a big deal when we're talking about the spending side of things, especially within couples. It's not something to gloss over. If you're feeling this way, like you're feeling guilty about your spending or something like that, and you don't have clarity on like what you can actually afford to spend versus what you need to invest as a baseline, that needs to get ironed out. Like that, and that is something that can provide a tremendous amount of freedom, right, within your own life and within your spouse. But not doing that has serious consequences, because you are leaving yourself open to issues with let's say one spouse is spend happy, one is frugal, right? And I know there's connotations that come with those. I'm not meaning to sound judgmental in either scenario, but like if you don't have clarity on these things with your spouse, you're opening yourself up to long-term relational issues. And sometimes these conversations can be uncomfortable, but they need to happen.
But yeah, I mean, just like even my own hustle with Kayla, like now we have the best relationship around in our relationship, but also around money. But we have also the most open communication and transparency we've ever had. I mean, I use Conquest, and we update the values, and we literally, like, on a monthly basis, just have check-ins to, again, making sure how things are going. And so we didn't have that before. And the other thing too, I will mention around the communication around the spouses, is I've made the mistake once since I started to start working with one spouse and not the other, and I've never made this again. And now I make it very clear from the get go. Usually I'll have an intro call with one of them, and I'll tell them right away. I'll say, okay, perfect. The next meeting is going to be like goals and values. You want to work together. It's going to be you and your spouse, depending on what's the involvement. Like if I'm only, let's say, investing or planning for one spouse, I'll have maybe one meeting with the other and then kind of focus more on with that one relationship. But I mean, if I end up with like really managing the household, it's really important that everyone's on board from the get-go. And I'll admit I'll never make that mistake again, because I'm still paying the price today and trying to pull in the second spouse, and also trying to bring cohesiveness in their plan, because one prefer to have everything kind of segregated in some ways. Again, you have to respect people's preferences as well, which I totally do. I just feel it's a missed opportunity for the household, because they could literally compound wealth a lot faster than they're doing now, just because it's actually pretty disorganized, which is a good segue into our third point, by third point of the discussion here. So the third point is decision fatigue and disorganization. Again, along this topic of the emotional challenges that clients are facing with money. So there's kind of two parts to them. There's the mental load, and there's the fragmented finances. The mental load, I mean, we see that a lot. I would say. I mean, I'm curious to see how you see that as well. But from DIY investors, like, usually when they start reaching a point where things get more complex, especially if they're newly incorporated or if they're business owners, now the managing investments and finances and taxes, and of course, understanding the concept of insurance and the risk that they're exposed to gets too complex for their
Mhm.
own knowledge and their own kind of education. And that's usually when they start reaching out. But that has a huge cost on your mental load, your stress level. You have to think about all the financial decisions you need to make. Sometimes you're second guessing yourself, and then now everyone is on Chat GPT. So it's basically half Chat GPT, half you, and then half Globe and Mail and the news that you're reading, and that's basically your financial planning and investment strategy.
Yeah.
Really, that's when you summarize it. And then you're kind of the middleman and everyone, and then you have an accountant sometime here, but sometimes you might have been filing your taxes yourself as well. So yeah, that mental load of coordinating your own financial life can really have a serious toll. And this is usually at the point where people start reaching out, and now they realize, like, well, it makes a lot more sense to start paying a professional and take this off my plate. Yeah, that's that. And then I think that the solution to that is really finding someone who will provide that, because as we know, there's different services offered by different firms, and that's why it's important to find a firm that is aligned with the needs that you, right, that is coordination of professionals. If you need that, if you don't, then go continue as a discount broker, or continue to be dealing with various professionals. But if you want that coordination of professionals and you're at that stage of life financially, this is where, of course, without shaming plug, like a firm like Million Wealth is well positioned. That's why we set up the firm the way we set it up, right? Where everything is under one roof, and to make it as easy as possible for you, where you only have to deal with one professional and then we take it off your plate. What's your take on this?
Yeah, I think the mental load of managing all of your financial decisions sometimes is something people embrace, right? And sometimes it's something they will shy away from. And I'm thinking there's so many everyone's different here, right? So there's so many people who are, let's say, a family household where one spouse makes more money and the other spouse has maybe a career that affords them more time, doesn't make as much money. But often I've seen that the person who has the career that affords them more time will take ownership over some of these organizational tasks. Like they will be the financial planner for their household. They'll be the budget person. They'll be, they'll do these things. And so the high earner, which I love this, by the way, I love meeting with people who do this because they're very organized in this sense. Like they've embraced the organization of it. They're not taking anything away from their life because they enjoy doing this stuff. And they've kind of organized the family household in such a way where they feel is best that sets them up well for the future. The issues I see with this is that they run into their own limitations on what is best, right? Because you only do have so much time to research tax strategies, to research optimal investment portfolios, to research these different types of things that will provide value for your family. And as they start to get into a position of my net worth is starting to get to a place, my investments are starting to get to a place where if I make a mistake on this, this could really cost me. And that's when either they decide to make the move to get third-party help, whether it's a fee-only financial planner or it's offloading kind of the bigger investments and decisions to a third party, at least to have a sounding board when making those bigger financial decisions. That's when we typically see for me, I'll speak for myself, like that's when I typically see clients come in and ask for help in those areas. They still want to have a lot of ownership over their situation. They just don't want to be making mistakes. And the reason why I love working with clients like this is because number one, they're already organized. Number two, they recognize their own limitations. And number three, they're not overconfident, right? When you're overconfident in your own ability to make the right financial decisions, you will inevitably, and I hope this doesn't happen, right? Like I'm not hoping this happens, but inevitably there'll be mistakes along the way due to overconfidence. And there were studies done on this. So like there's a study done called, I think it was called something about gender differences in investing. And it found that men trade more often than women, leading to lower returns in their portfolios. And the core reason why men trade more often than women is because men are more susceptible to an overconfidence bias. Right. So they feel more equipped to better handle, these complex decisions. Right. Now, are they? I mean, well, the data suggests that because they're underperforming women with these trading strategies, that they will actually, they're actually not better equipped to handle this stuff. Right. And now women, they were looking at biases in women too. And they were more prone to a status quo bias, meaning they don't want to make any changes because what they've done in the past has worked. Right. So there's a middle ground to be had there where it's like, okay, one person, and obviously, this study was taking data on massive gender differences that this obviously may not play out in your individual household, but by and large, if you're feeling like, hey, I'm organized, but I'm also like susceptible to like making, poor financial decisions or trying to chase the markets or make trades or do these things, then you're not actually helping your situation there. And so I think this is where recognizing your own limitations come into play. And decision fatigue and disorganization, like I think for me and you both, I think I can speak for both of us, probably one of the biggest value adds we give to clients when we meet with them is organization. Like we organize their financial life. Like we say, hey, this is what you can spend. This is what you should save. We look at their investments. This is how your investment portfolios are not optimal. This is how we'd recommend you reorganize them so they are optimal. We look at their TFSAs, their RSPs, their tax deferred accounts, their taxable accounts, and we'll say like, hey, based on your goals, this is actually what your contribution strategy should be. And so that's when it brings clarity and financial organization into the picture. That's where I think many couples and individuals will start to see big mistakes happen, is when they're overconfident in their own abilities to do these things. And I'm not just saying that to promote work with a financial planner. The data bears that out. When you're overconfident in your abilities as a financial manager, you're going to do worse. But that's just proven.
Yeah, no, and you touch on so many good points. One of them is overconfidence, but I would say one of the biggest one is ego. Having the ability to put your ego aside, and I can talk about my own experience as well, but having the ability to put your ego aside is probably one of in any areas of life, I would say is I would say one of the most important thing that you can do to, I feel, free yourself in a way, for lack of better words. But I would say the reason why I believe people feel so confident is, I think the fault is on the discount brokerages. And let me explain. I come from an investment background. meaning that when you think about finances, you think about investments. I thought about investments. And then later in life, I started branching out into the concept of financial planning and the world of financial planning. And that opened a whole new world in different facets of how everything is integrated. And even today, sometimes I'll meet people and they'll say, oh, like I'm a finance nerd. And I'm like, okay. And like you have a Wealthsimple account and you're picking a bunch of different ETFs. Like that's what the world kind of portrays what finances is. But it's a very, and to come back to what you're saying is in terms of having limited I would say knowledge or understanding of like what all are all the factors that are impacting your ability to build wealth over time. And I think in general, what's portrayed is, oh, you have the ability to pick stocks, or you have the ability to pick ETFs, which I think it's one component of many other things that are also extremely important that you need to take care of in order to build wealth efficiently. So I think there's that. And then once we are able to show that to people, they're realizing, oh my God, there's so much that I didn't know. There's so much that I overlooked. This is where bringing that cohesiveness in all these areas, right? To make sure that you're making every dollar work for you. I repeat that to every client is don't let miss on opportunities. Like make sure every dollar that you're hard earning, that you're working really hard, is really working for you, and try to again minimize mistakes. And then of course, like some people, I come from a trial and error background, right? And I still, I still meet a lot of people like they're, dabbling in options and whatnot. And there's a lot, I'm sure you have clients as well, like they'll trade stocks with 10 or 15 or 20% of their portfolio. And I always encourage people to do that. I'm like, hey, if you have a creative, if that brings you joy, by all means, like do it. But then the majority of their wealth, is again either managed by me, or it's managed in a way that it's going to minimize the impact of their mistakes,
Mm-hmm.
on their ability to again compound their wealth. But yeah, ego and being kind of open minded into the fact that like, okay, what am I missing here, and in how I'm going about my finances, and
Yeah.
be able to identify those gaps. It's really key.
Yeah, absolutely. And I think kind of just to kind of remind people, like what we're talking about here is the most common things people have brought to the table for us to help with. So like the most common reasons people have reached out, the most common emotional issues people are facing. And I think decision fatigue and disorganization. I mean, decision fatigue can lead to just the inaction part. And the inaction part is costly. And then disorganization, I mean, look, if you're disorganized with a $10 million net worth, you're probably okay. Like you could obviously be, optimizing way better. But if you're disorganized at the stage of accumulating wealth, where you're starting to build a bigger net worth, but you're by no means independent financially at this stage, that can play a major factor on what the next 10 years looks like. And just give yourself a leg up and get organized, right? And getting organized sometimes means recognizing you don't know everything and seeking help, right? Recognizing that you probably shouldn't be filing your own taxes, recognizing that you probably shouldn't be, especially if you have kids and assets, you probably shouldn't be doing an online will. Recognizing that you probably don't know everything there is to know about investments, and then look at the trade-offs of will working, and this is what conversations we have with clients all the time. Will working with us actually bring a meaningful difference to your life? Like, will paying our fee make you happier? Will it make you have more peace of mind? Will it help you make better decisions? Will it help you avoid mistakes? And that's the ultimate question we ask people when they're deciding to work with us. And so that's where you've got to ask that question as well, and say like, will seeking a third party's help in this, with the confidence to know that I'm not making bad decisions, the confidence to know that I am optimizing for my goals, the confidence to know that I am now getting organized, will that help you sleep better at night? And if the answer to that is yes, then that's something that should be done. And it's not like you're absconding your own responsibility, right? It's like you said, taking that ego out of the equation, right? And recognizing that there are others who are maybe in a position to help with this. And maybe you don't need to know everything, and maybe you can take some of this mental load off of your plate and put it on someone who you pay to take it off. right? And then it just becomes, is the trade-off worth it? And that's what you've got to do. And credit to kind of like a lot of advisors now in the industry, they're very transparent. Hey, this is what you're going to pay me to take this off your hands. And if that's not worth it for you, that's okay, right? That's okay. But if it is worth it for you and we can confidently help you make better decisions, help you optimize, help you pay less taxes, help you sleep better at night, if that's the trade-off that you're making and it is worth it for you, then don't be inactive in this. Let's get started, right? That's a lot of our conversations with new clients coming on board.
I will also add that in 2 years, just over 2 years, that meeting with, again, households with various income, there's one that was, I would qualify as like quite wealthy, that invested heavily in their own education. And that's the only one that I did a advice only plan. So just a fee only plan, to making sure that everything was, I guess, aligned for this person, and they continue to do the DIY. So why I'm sharing this is because it is possible for you to do it. And I say that to every client as well. I say, hey, if you want a DIY, props to you. Because yes, like, you will save in some ways, a cost that you would be paying someone else. Now, like you just mentioned, right? What are you getting in return? But it is definitely possible. But what I think a lot of people are missing is it will take you a lot of work, maybe a lot more work than you anticipated, to get it right.
Yeah.
But yeah, and I said, like, interior, I've seen this one, and everything was so cleaned. It was like, well, very organized. Everything was tied up. But again, they spend a lot of time in, reading books, and there's a ton of resources now out there that you can deepen your knowledge, not only in investment, but in financial planning. Can tune into a podcast, maybe get some insights in there. But yeah, there's a lot of resources you can get access to. So it's not impossible, but it's definitely not easy, and it's just going to require the time. It's just a matter of, like, how bad do you want it? Right.
Yeah,
How bad
exactly.
you want to, how bad you want to do it. So,
Yeah.
hey, that's a good segue into, okay, the last point, which is the physical and mental toll of the grind. I mean, this part was mostly on the, I mean, you're mostly focused, I guess, on the tech sector, but I do get a lot of clients incorporated that I know for work physically, right? Think physio. I have people in the kind of auto sector that are quasi, like, technicians that have their own corporations. But I do work with a lot of people who work physically, and one of the common theme with these folks was around their health and their ability to work, late in their 50s and 60s, and continue to be healthy. And that was one of the main driver of, okay, well, is it possible to retire early? What does that look like? And also, one of the funny thing that did is, it's, and of course, maybe it's my own way of living as well, but it's also encouraged them to take more care of their health today, to
Hmm.
be able to preserve. And then this is people in their 30s, and they're like, hey, Guillaume, like, I'm not getting up as fast from the ground with my kids, and now, like, I'm in mid 30s, and it's not that I'm having a hard time, but I need to continue to making sure that I'm taking care of myself, so that I can continue to perform, and let alone enjoy retirement with the kids and the grandkids. And then also, just to say, this is a side thing, but if you are incorporated, I've been setting clients up, and I've had amazing success about this around my HSA, so health spending account, wellness spending account, the flexible spending account. So every corporate business owner that I have as clients, I set them on that, and the feedback has just been just fantastic. They love it. It's a way to funnel your, not funnel, but, like, recategorize your personal expenses, right, on health and wellness, to your corporation as a deductible expense. I can't remember which episode we covered that, but we did cover that in one of the previous episodes on the podcast. But yeah, my HSA, this is the one I use, and the feedback has just been amazing. So if you're incorporated and you want to, and why I'm sharing this is because, knowing that they have access to that, that's helping them even spend more money on going to the massage, going to acupuncture, going to go see the physio, instead of postponing this, because lots of them don't have health plans at all. Or if they have one, it's not, the greatest. So yeah, that's the physical and mental toll of the grind, which, I guess, it's
Yeah.
not this emotional. This one is physical, but
Well, and I think it speaks though to the fact that people can't work forever, right? Especially people in this in those industries. And I think it has a lot of correlation to even the people that I work with in the tech sector, because how many people do working in tech that are working 60 to 70 hours a week. They're engineers. They're always fixing problems. They're always, building new things that require constant oversight. And that is draining, right? Throw on top of that you've got a boss you maybe don't like, right? Like, and then, or you've got a situation at home where, like, you've got a young family and you're working 60 hours a week. And that stuff is mentally draining, right? So there needs to be an end to this. And then people need to see that end. And so the physical and mental toll, I mean, it applies in any industry. And I think one of the things that I was listening to a podcast, Dr. Mike, Dr. Mike, the kind of celebrity doctor. Anyways, he's kind of popular. He's pretty common sense, pretty evidence based, pretty anti-influencer in that context. He was talking about the idea of optimizing your life across multiple variables, right? So, for example, if you're like, the physical toll is really taking a grind on me, so I'm going to wake up at 5 in the morning and work out every day. Well, look, if you're 45 and you want to have like washboard abs, then like you're sacrificing something, right? Like you're sacrificing something to get that. You're sacrificing maybe a better sleep. Maybe you're sacrificing morning coffee with your spouse. Maybe you're sacrificing, you're sacrificing these different things. Okay, so then maybe you have more energy for your work day, and that's good, right? But then you're not optimizing for other things, right? So you can't just optimize for one thing in life and think your life's going to change, right? You got to optimize across multiple variables. And so optimizing for health is important. And then also optimizing so that you can retire early because your job takes a physical toll. That's important. Optimizing so that your marriage stays strong. That's important. Optimizing so that you have a good relationship with your family. That's important. And so you've got to be able to kind of optimize across multiple variables in this and not just kind of focus on one thing, which, I think you can get focused on, well, this job is such a grind, I'm going to retire early. And, you find yourself working 60 hours a week into your 40s and you're like, man, I miss my kids growing up. Right. And that's obviously not something you want to do. And so I think this comes to that point as well, where it's like, look, if you're in a physically demanding job, it's important when you're younger to get your money habits right, so that if you're at a pivot point in your career where you're having to sacrifice things that are important to you in order to hit maybe the ultimate goal of retiring early, but you've got an exit route to a less demanding career that affords you more time with your family, and you're in a solid financial position to be able to do that, that's an amazing position to be in. And so I think, we've talked to people who are in this position who basically said, like, man, I'm going to quit. I'm going to go back to school and I'm going to go work in a job that pays me $80,000 instead of a job that pays me $200,000, right? Because I'm just sick of the grind, right? And I've made good financial decisions up to this point, so I have the ability to do that. So I think taking all of those things in context too is really helpful to, like, am I making the right financial decisions today so I will be able to have that pivot point? If I do want to pivot to something different in my career that's not as physically demanding, maybe I will have to work longer. Maybe that's okay with you, right? Because you're not as in a demanding a career. Maybe I will be able to spend more time with my family. Maybe I will be able to, optimize different areas of my life. So I think that's an important mindset to have around this as well.
Yeah, I know exactly. And as part of the plan is that's a tangent with like career planning as well, like planning an exit, whether it's like you just said, transitioning to a different career or stopping entirely or anything in between. And again, that comes back to a few of the points that we've alluded today is quantifying it, planning for it, planning early, and planning for different scenarios. To especially if you are in a position where life might force you to make a decision, if you've planned for it early enough, it's going to be a really smooth transition. And you might be looking really forward to it, right? You've put your time in and you've worked really hard in one career, and then you're ready for your next gig or your next phase
Yeah.
of early retirement and whatnot, right? Or phase retirement, you call it however you
Yeah.
want it.
That next phase of life, right? Retirement isn't the end goal, right? And I
No,
think
yeah,
that's what, like, that's something that I think the financial industry has really imposed on people, that retirement, the Freedom 55 movement, retirement is the end goal. When you have that frame of mind that it's the end goal, I think you are, I'm not saying you have this, I know you don't, but like when that's the messaging that you've internalized, that retirement is the end goal, you are setting yourself up for a very unfulfilled segment of your life, right? Because we're wired to always want to be productive in some capacity. So I think, yeah, like retirement isn't the end goal here. It's just like you said, the next phase of life. What is that next phase of life, and how can we work towards that? And always having something you're working towards. It doesn't always have to be, it shouldn't always be, I don't think, money related, but I think you always do need to kind of have a different phase in sight that you're working towards and those goals that you're setting.
Yeah, for sure. And making it, feeling that you're making a contribution, whether it's like the society, your friends, your family around you, or that you're of service and that you're making an impact. Like everyone wants to feel like that. Most people wants to feel like that. So one thing I will leave the listeners with, and I've already alluded that, but it had one of the biggest impact on myself and even the conversation I have with clients is this book called The Five Types of Wealth, which is kind of tied to the conversation we've touched on today. It's by Sahil Bloom. And oh my God, in every conversation now around the goals and values, or even like on the ongoing conversations, I always refer to the concept shared in this book around optimizing those five types of wealth, which goes beyond just financial. It's just a wonderful way of living, and it's a wonderful way of approaching life and seeing, okay, which buckets do I need to maybe spend more time on? And it's just a really good way to assessing kind of, yeah, where we're at and what we can improve, right?
Yeah.
Which I get a lot of fulfillment trying to improve things in life. That's, I don't know, just maybe it's just me or whatnot, but it's cool. I love the
Um,
progress. I love the journey. I'm all about the journey. So
yeah.
hey, I think that's bringing this to a close. So again, we'll put the links in the show notes. I want to mention as well that I rebranded it, but it's called the Weekly Brief. So this episode, along with a newsletter, will drop every Sunday. So if you want to subscribe, the link is going to be down below. And then if not, you can, of course, add us on LinkedIn or on our respective social media. YouTube, Sam has started focusing more time on his YouTube under his own name, Samuel Lichtman, CFP. I'm somewhat present on Instagram, if not, yeah, LinkedIn and the podcast. So again, thank you for listening, and stay tuned for more episodes with this type of content. So thank you and have a good week. Bye.